This is an update for Monday, May 6th, 2019. We've officially passed the rollover period as indicated with these dotted lines here. And I'll review the trade that I took here with the pound dollar. I think it net approximately 12 pips or so. It wasn't a big trade. Bounce off of this support level here. So I'll go ahead and tighten up the charts and show you what I was looking at. So I was toggling between the 30-minute chart, which is what we're looking at right now, and the 1-hour chart, which is what I'm looking at right now. So here on the 1-hour chart, there was a pretty important, in my opinion, at least temporary. It was like an intermediate sort of resistance area that acted as support right here. One of the reasons why it's important to me is the number of times that it actually solidifies or touches a support or resistance level. It's a little bit different than, for example, this spike high right here, or maybe just a spike low. It's not to say that spikes, the highs or the lows aren't significant, because sometimes they are, especially when we see a major reversal taking place. But a situation like this, it lines up pretty important to me. And then I also notice here that it's sitting right at the 1.3080 area. And the 1.3080 is a psychological level that I pay attention to. I pay attention to psychological levels. I always have. They don't always have an impact. That's just, sometimes I get the question, where you're looking at psychological levels, how come this time it doesn't work, or this time it doesn't matter? And it's not just psychological levels by themselves necessarily. Very often I'll use them as take profit levels. But in a situation like this, you'll notice a few things. You'll notice that here on the 1-hour chart, and the 1-hour chart is pretty important to me, at least the way I trade my strategy. Some people, don't care for it, but that's where I execute a lot of my trades, and I find some really solid, trustworthy signals on the 1-hour time frame for day trading. Again, at least according to the way I trade. Now, I'm not saying you can't trade off of any other time frame. You certainly can. It's just the way that I do it. So here we have 3 times approximately that price has stopped at that resistance level, which was a psychological level. And then from this retracement from Friday's move, that low and that high, we have approximately a 50% retracement here. And then you can see how it's sort of lining in right there. So we've got 3 things going on. We've got a resistance level, the 80 psychological level, the 50, and then there was some divergence here. So then I switched to the 30-minute chart. And from the 30-minute chart, I'll go ahead and pull and drag this up. And from the low that I was deciding to get into that trade, which is right about here where my cursor is, I'll put the crosshairs there, there was a head and shoulders pattern here. This is the ghost, the CCI ghost pattern. And I've often said that I don't trade every ghost pattern that I see in the CCI. I know a lot of Woody's CCI traders, they, some of them, not all of them, but a lot of them will do something, or some of them will do something like this. They'll take their charts, and they don't even look at the candles or at price levels. They just trade the Woody's CCI indicator as a trading system by itself. And it works for some people. For me, I'm not really comfortable with doing that. I learned a lot from the Woody's CCI group many, many years ago, but I learned to take pieces of some of the strategies that they use and incorporate it into my own. So when I see a ghost pattern, I'll trade it, but I want to do it carefully. And I also want to make sure that in this instance, this was also something that looked like that fade the 00, where it was moving through the 00 level and then bouncing and going back up. Now the expected target would normally be about 40, but it didn't look like there was enough volume or participation at all to see price go up there. It might later, but look at how many hours has gone by here. I mean, I'm not going to sit there and babysit a trade that's just going to move another 10 more points. Better opportunities if I just, close that position with a profit and then look for another trade. But what I'm getting at with this Woody CCI is that I'll trade the pattern as confirmation for what I see here. Again, price finding that support low on the 1-hour time frame, the 80 psychological level, the 50, all of this was lining up in my favor. Now I was also using my reversals template, my reversals chart, which allows me to trade and find short-term, intermediate tops and bottoms. I can use that same template on the daily time frame and find bigger overall tops and bottoms. The more significant ones, the ones where we see price actually turning and stopping from, let's say, for example, in a previous uptrend and then starting a new downtrend, something to that effect. But we're not looking at the daily time frame right now. We're just looking at the trade that I executed here. So this one might go up a little bit higher. It might even eventually hit the 40, maybe Tuesday sometime. But that's a long time to put money into a trade and watch it sit there for 24 hours when there might be a better opportunity that's going to move faster, or we all know how exhausting it is to sit and watch and babysit a trade. It's tiring, it's time consuming. When the next good trades come around, you either fall asleep or you miss them, or you just can't focus because you just don't have the mental capacity and the energy at that point to process the information and make a good solid financial trade. So it's better to just take the profits here, lock in profits at this point, and then step away knowing that there really isn't a whole lot of momentum here, and I'm going to be looking for a better opportunity and something that's probably going to move a little bit faster. So very often I get some pretty good moves during the New York session. For those of you that are new using the service, I'm not saying that I only trade the New York session. It's just that it might look like that. So if you see a lot of the trades that are only open during the New York session, the market moves in cycles. Sometimes I get continuation breakout trades during the Asian session and the London session, and I don't get any during the New York session. And then there are other times when the market breaks out and starts moving because New York U.S. economic data is a little more significant at that time, depending on the types of news releases that the types of news events that we're trading. So that's the cycle that I see that plays out through this monthly and weekly and quarterly, even annually. So the timing of a lot of my trades changes. It's not always at the same time, the same day, same time on the same day, like that. In other words, let's say the London session. I don't always get a trade during the London session. And sometimes I have to wait until the New York session just to even get an HL30. So that's what I'm getting at. It does change and it shifts depending on, whatever is going on in the market. The market dictates all the price action, the way we react to it, the news. We listen to politicians, we listen to bank officials, Fed officials, we listen to all of them. And it's important to realize that sometimes what they say is going to have an impact, and sometimes they could make the same sort of comment, and just depending on the cycle, the timing, where we are in the marketplace, that cycle, it may not have an impact at all. So it's really a matter of just following along with it. So during the New York session, I'm thinking that I might get a better opportunity, but I will be watching during the London session to see if it doesn't produce a trade. So if price remains here inside of this range from Monday's low to Monday's high or Friday's high, I would prefer to trade either a bounce off of the weekly low, which is here now, or last week's high, which is just above this week's high. That's from Friday non-farm payrolls. So when price significantly or more, where it tests support and resistance and there's no mistaking. In other words, let's say it starts to push through support, but it doesn't close below that support, and then it turns around sharply, maybe with some economic data. That might be an opportunity. That might be a reversal trade that I would consider, something that might look like a Tech 1 trade or a T2 pattern. Of course, at that point, I would switch over to the other chart to confirm that it looks like it's a reversal with these indicators that I use, something to that effect. I don't think that I'm going to get a continuation breakout trade to the upside and it's going to continue. However, we're talking about the pound dollar, and if we go to the pound dollar, we can take a look at the daily time frame, and let's take a look at what happened today. This is what we're looking at so far. We've got price taking out some key resistance levels. At that point, we still need more. So it's difficult to say whether or not this is just a pullback to that 50 level and then it's going to continue higher. It's just a matter of trailing and tracking this A, B, C price swing all the way up as it takes out some of these key resistance levels. So right now, I'm not sure if it's going to move down deeper. This reversal or yesterday's candle right here, that didn't close more than that 50%. What I prefer is like the 60% opposite of the last bullish candle. This is closing really high. So I'm thinking this looks like a retracement to a Fibonacci level and then maybe a bounce back up. Might take a few days before it really picks up more momentum to the upside, if that's what it does. I'm not calling to go long just yet. I still need more confirmation. I would prefer to go to a 1 hour chart and find support and resistance like this. This is the 1 hour chart, pound dollar, and then possibly look for a breakout to signal that move. Or, as I said earlier, maybe another retest of the low where there's a lot of divergence and then it turns around and snaps back up again. It looks like that reversal pattern. That might put me back into the trade. And then perhaps as we watch the 4 hour and the daily chart, we could see price then pick up that momentum to the upside. Something to that effect. I'm sort of thinking forward way down the road here. It hasn't happened yet. I don't know which direction it's going to go necessarily, but I've got some ideas of how I would trade it if it does either direction. Going back to the HL30 page, and take a look at the euro dollar. The euro dollar I stayed away from today, and I didn't do anything with it. You can just see this. I mean, this one looked like an HL30 a few times and just wasn't going to go anywhere. I could tell that it wasn't going to go any lower, so I just stayed away from it. I will take two trades simultaneously if I have to. If they look good, if they look appropriate, if I've got a solid 100% signal confirmation, and if it's with the news, I will take more than one trade when I get the opportunity to. But in this instance, getting into the pound dollar trade and not knowing how far this one, the euro dollar, was going to go, I just stayed away from it. It looked like it was going to remain in this tight range. This is what I refer to as a typical Monday. Sometimes Mondays are just like this. And there are Mondays that I just don't trade because I can see that across the board, price just isn't going to go very far. You know, you get these reversal signal candles and they don't go anywhere, and then they go back up. And all you're doing is just scalping in and out of these little tight ranges, and I'd rather stay away from that. Dollar yen, to me, it's in a relatively tight range. We've got the high this week so far at 95 and the low down there. I'm not looking for anything other than maybe another move or maybe another retest of the resistance from last week and then maybe another move back down. We'll go to the larger time frame here for the dollar yen. That's just what I'm thinking at this point. A huge gap when the market opened. It really didn't fill it. I mean, it did, but not significantly. You can see here on the daily time frame, this might end up moving a little bit lower. And if it takes out this key support level here back from the end of March, that's March 25th, that is March 22nd, that low is approximately 109.67 or 70 area. If it closes below that area, we could probably expect price to go a little bit lower, maybe find some support on a Fibonacci retracement level, something like that, but it looks like it might go lower. So I'm just looking for opportunities to sell this at this point. I'm not comfortable with selling it right now with what you see here. This is the 1 hour time frame. And I see these reversal candle patterns. But I still think that the way the Asian session sort of moves, sometimes you could expect price to turn around and retest some of these resistance levels. So going to the 30-minute chart, I think it's just going to go sideways for a little while. Meaning for the next maybe 7-8 hours possibly. So I might not get really any trading opportunities that look possible until till the London, maybe even until the New York session. And again, I don't mind waiting until the New York session because that's usually where I get most of my really solid trades. I'm going to go to the 1 hour time frame here. The New York session is when I get a lot of solid trading opportunities, especially with a lot of the news that comes out at that time. There's a lot more participation. There's that overlap. So I'll keep an eye on it and see what opportunities we get there. But right now, I'm flat. All currencies. I'm in no trades right now, and I'll send out another update about this time tomorrow.